Dear traders, welcome back to another weekly outlook. It has been a long time since I posted a new weekly outlook, but no worries, we will continue the weekly forecasts every Saturday or Sunday on this channel. Today we're going to talk about Forex and index futures and see what we can expect during the next week. So leave a like and subscribe, and now let's get into it. Right now you're looking at the DXY weekly chart, the dollar index. If you have been following the markets during the past weeks, you can see we had a retracement to bullish weekly candles. We retraced back into the weekly fair value gap. This would be high and low, outlined here with the blue lines. And I want to see a continuation lower, attacking this obvious sell side liquidity. We have here relative equal lows right here and some more downside targets, which I will talk about in a second. But I still prefer the rally lower, and what makes me confident is that we closed below the weekly fair value gap. If we would have closed above the weekly fair value gap, this would indicate that the market is very bullish and we will likely trade above the swing high. But as you can see, market didn't close inside, it closed below the weekly fair value gap, which is a sign that market wants to trade lower again. And we finished the retracement, repriced into a premium. If you draw a fib from high to low and take the 50%, we would be above that, which means we're right now in a premium market and we can accumulate new shorts to then trade lower. So overall, right now I'm bearish on dollar, but of course I can easily adapt to new market conditions. If the market trades higher on Monday and Tuesday, of course I will adapt to the market situations. But let's talk about the other levels. Right here we have the 50% of the monthly fair value gap. This will be your own responsibility to go into your chart, in the monthly chart, and draw out these levels. So 50% of the monthly fair value gap, here's the low of the monthly fair value gap, and right here the gray box is also a monthly fair value gap, but these are not short-term targets, these are long-term targets. If we can stay below the weekly fair value gap and trade lower, then this would be something in my interest, which is my interest. But right now we want to see if market can still respect this weekly fair value gap going into the next week. Before we go into the daily chart of the dollar index, I wanted to point out the US dollar index seasonality here. As you can see, the time of this recording is the 21st May of 2023, and as you can see, in May we have a rally, and then we go into small consolidation, and at the end of May we have a small bullish run, and then we sell off. And this is exactly what we want to see right now in the US dollar. We had a small retracement higher, and then into the end of May and the beginning of June we see a decline lower. By itself this doesn't mean anything, but because it's in confluence with our technical analysis, this is very beneficial to know, and this supports our idea of a bearish dollar. Now you're looking at the daily chart of the dollar index. Right here you can see the weekly fair value gap, which we talked about a few minutes ago, and right here we have also this daily fair value gap, and look how perfectly the bodies respect this level. The bodies stay below the daily fair value gap, and on Friday we had a small retracement lower. Over here we have a daily bullish order block and a fair value gap, so this is a very important key level going into the next week. So I outlined for you the two possible scenarios for the next week. First, we have the downside movement, which I of course prefer, as I just talked about on the weekly chart. And the second scenario could be if we respect the bullish order block with the fair value gap, that we can trade higher above the swing high, maybe into this open daily fair value gap. This could also be a possible scenario, but I of course prefer the downside movement. This means Monday should straight away trade lower, and I don't want to see a run above this high anymore. It will be very crucial how we trade into or through the bullish fair value gap. I would like to see a close below the low of the bullish fair value gap. This would indicate that the dollar is very, very weak and that we definitely will trade below this swing low and maybe into this open fair value gap right here. I didn't outline this, but as you can see, we have also relative equal lows, which is not a target for this week, but maybe in the next, going into the next month, this will definitely be a target to consider. And now let's move to the Euro US dollar. So as you can see on the Euro US dollar weekly chart, we had a retracement lower. The last 2 weeks we traded into the monthly fair value gap right here. Above that we have a open volume imbalance on the weekly chart. From this candle close to this candle opening, we have a volume imbalance. Market didn't trade up into it, just slightly failed to trade into that. But we had a retracement lower and we perfectly retraced into the weekly order block, coupled with a balanced price range right here. And what I expect for the Euro US dollar, of course, if we want to see a bearish dollar index, I would want to see a bullish Euro USD. And this is the case. Of course, the next week we won't see a run above the swing high, but I want to see if market respects this weekly order block and the balanced price range, because there are really no other reference points inside this area, as you can see. And I would say if we close below the balanced price range, it's very likely that we could trade below these relative equal lows. Now moving on to the index futures. Here's the E-mini S&P 500 futures chart, the weekly chart, and as you can see, last week we finally got the run higher above the swing high. We didn't reach above this buy side liquidity pool, and this one is still open, of course. What do we expect going to the next week? This target would be very reasonable and realistic, that we can reach up into it. We rallied from a weekly fair value gap right here. As you can see, we traded once and twice into it, and also as another confluence we have this down close candle, which is a bullish order block extended out in time, and as you can see, it is in confluence with the weekly fair value gap, and then market traded away from it. But before we go into the daily chart, I wanted to show you the E-mini S&P 500 seasonality chart. And as you can see, we have the time period of May. Again, the time of this recording is the 21st May of 2023. So here you can see the time period of May. We are at the beginning of May, we usually are inside a consolidation, and then at the end of May we drop lower, and then at the end of May going into the beginning of June, we see a rally higher. And this is also, of course, in confluence with our weekly analysis and also our daily analysis, which I will show you in a second. But as you can see, the seasonal tendencies line up with our technical analysis as we saw on dollar. But now let's go into the daily chart as promised. So on the daily chart, a little bit more lines over here. As you can see, the weekly fair value gap right here extended out with the blue lines. Look how perfectly, again, the bodies of the candle respect this level on the daily chart. Didn't close below them and stayed above them and then traded higher. Then right here we had a daily fair value gap, the busy high and the busy low. Market accumulated new longs right here for a very, very long time. As you can tell, we had a consolidation for about over a week or two. And right now, the last 3 days, we had a massive rally, I would say, in comparison to this consolidation. We traded above this high, and now we created one and a second fair value gap right here. So this will be the question going into the next week. if market trades into this fair value gap and rallies higher above this buy side liquidity pool right here, or if we see a deeper retracement going into this fair value gap. I prefer that we stay above, that we rally away from here, from the higher fair value gap, but market can trade into this lower fair value gap, but I definitely don't want to see a full body close below this fair value gap BC low. So this is the game plan. I will be watching Monday, Tuesday if we can rally away from this higher daily fair value gap. If not, I would anticipate a deeper retracement into this fair value gap. And right here we have also a balanced price range, which supports the idea that market shouldn't trade lower anymore and just rally higher from this higher fair value gap. Now let's look at the other two indices. Right here on the top we have the NASDAQ, and down here we have the Dow. As you can see, NASDAQ is the leader of the three indices. It also slightly failed to take out this major swing high on the weekly chart right here. So this could be a reasonable target going into the next week. If we see a retracement, the volume imbalance high right here could act as support and propel the NASDAQ higher into the buy side liquidity. Or if we see a much deeper retracement, we have a weekly order block. You can also use this candle's high right here and extend it out in time and use this as your bullish reference point for the NASDAQ. And the Dow is the weakest of the three indices, but still, if we want to see a upside continuation on ES, Dow should expand higher as well. A longer term target is the swing high and also the weekly premium consequent encroachment of this week. The Dow is still trading inside its weekly fair value gap, so let's see how it trades away from that. I want to see a nice movement away from it like we saw here on the NASDAQ with this candle. So now let's look at the economic calendar to determine on which days we will be trading and if they're high or low probability. So on Monday we have no news releases, and just look if the market wants to trade higher or if it trades into the fair value gap as discussed on the ES. This results into low to mid probability conditions, and I will look for scalps between 9:50 and 11 a.m. on Monday if something presents to me. On Tuesday, we have high impact news releases at 10 a.m. and 9:45 a.m. The next day we have FOMC, so market could stay inside a consolidation or create a simple seek and destroy profile. This is also more low to mid probability, which is also a scalping environment, but I will look for setups between 10 and 11 a.m. On Wednesday, we have FOMC meeting minutes. For me, there will be no trading during the AM session. As I said, market will likely stay inside a consolidation before the big news release. And in the PM session, we could wait for the second wave move after FOMC meeting minutes release, which would be like more of a mid probability condition, and I will look for setups between 2:30 and 3 p.m. on Wednesday. On Thursday, we have a red folder news event plus a medium news release at 10 a.m., which is also this is more of a mid to high probability day. I will look for setups between 10 and 11 a.m. Friday, nearly exactly the same thing, red folder news event plus medium news release at 10 a.m. This results also into mid to high probability trading conditions, and here of course I will look also for a setup between 10 and 11 a.m. If you wanted to trade only on 2 days, I would choose Thursday and Friday, because in my opinion these are mid to high probability days where you can look for a setup, because on Monday and Tuesday you have not the benefit of knowing what FOMC did, and market could stay inside a consolidation on Monday and Tuesday, And then Wednesday with the FOMC meeting minutes, we could get the expansion. But of course, it's up to you to determine when and which market you want to trade. But this will be it. If you want to get updated on a regular basis, join my Telegram channel, which is linked in the description below this video. And I wish you a wonderful trading week. Stay safe, trade safe. Bye.